Hey, Scott. Hey, Dan.
Hey, Scott. Brad, good buddy.
How are you, bud?
Got a hell of a show today.
Hey, it's Wednesday. It's our QA session.
It's a Wednesday. It's our Q&A session. Let's jump right into the disclaimer. Trade ideas and everything you see at this webinar is not meant to be construed as investment advice. We are an informational educational company, and all the information in this webinar is for educational and informational purposes only. Okay, so Brad, like I said, I always like to tease you with stuff you're not ready for. You're gonna have to answer some questions today, Brad.
Oh my God. All right, go. I mean, hey, there's nothing I can prepare for, right? It's like the SAT. You either know it or you don't. And yeah.
Okay, so for you guys to really have value out of these webinars, I want to teach you things that really are things that you can take home and use forever, not bullshit like what's an MACD number, or is relative strength 80 or 90 a good time to buy or short. You really need to forget all of that. Double checking. Alice says that I'm not audible, but I feel like I'm audible. Brad, is everyone hearing me?
After we tested earlier, you're both coming in a little bit faint, so either maybe bump the mic up a little bit or just kind of speak up a tad.
Let me see what I can do here. Hold on 1 second. Let me make sure. Okay, how about this? Better?
No, that seems the same.
Okay. 1 second. Okay, you know what? Let's just keep going. How about I speak louder? How about that?
There you go. That sounds good. Yeah.
Okay, no problem. So what I like to do is I like to communicate and express knowledge in a way that I would have liked to have been taught. Okay, and that's why you're seeing what you're seeing here. So many people, Brad, in the webinar haven't even looked at trade ideas, and they're new. And to the ones that are subscribing already, you should be paying attention to this as well, because this is critical for your success. Trading and investing for yourself, it's the right of your life. But I really, Brad, and this is, again, I can't do this to the studio audience, but I want to ask you a couple of questions about what you see here. So what do you think about this guy when you see it? Just curious, Brad, I mean, from one expert to another.
You bet. Well, when I look at this guy, and I'm not a surfer, although I do dabble in the water, I look at him and I do see him as an expert. One, he looks very relaxed on the tip of his board. That's not an easy maneuver to do on a beautiful Southern California day, but he looks like he's a professional enjoying himself, really just relaxing out on the wave.
Definitely conveying some expertise, right? Like, there's a sense when you see that picture, he knew what to do to get there, how to get on. I believe this is called toes on the nose, not to be uber surfery, but there's a reason I'm showing this to you. So, Brad, how do you think he got that way? I mean, we identified.
Got that way with a lot of practice. I think he probably really enjoyed doing what he did, and he does a lot of it, and that's where years, hours and hours of practice.
Probably even grew up doing it and been doing it for a long time since a young age, and maybe had aptitude since then, like maybe had some talent, might have been flexible, and continued and got really good at it, and hence the picture. What I'm trying to say is investing where you can live off of your investments is not unlike the kind of expertise you're seeing here. And often in our industry, people make this false claim that there's some magic out there that exists that allows you to instantly jump on the surfboard, get on the tip, and do what that guy is doing, and that is not the case. But this is going to be one hell of a show. Brad, you know that, right? And the point is that some exciting stuff's happening to make you all be here at the perfect place at the right time. Okay? So again, this guy, he's an expert at what he does.
I mean, granted, Dan, it's a lot easier to learn that when you're younger, but it doesn't have to be the case, right? You can learn something and pick something up when you're older, too.
It doesn't have to be the case. So This handsome kid had and has some talent. So this is me, and this is why you guys are all at this webinar where I'm speaking. But Brad, the funny thing is, it's not just only that I'm telling you that, people have published stories about what I've been doing, and I actually kind of got famous before the dot-com bubble, so there wasn't a lot of internet back then, but there was this thing called newspapers.
Look at those old things.
Oh, nobody even sees them anymore. But look at the picture, Brad. Look at what these stories are about. So these stories that are happening in between 1996 and 98 are actually just the same. It's about you guys, the people in this webinar. That part of the story hasn't really changed. So people have been trying to do what you're doing for quite a long time. But what makes it very exciting for us is that technology to facilitate what it is that we do is only now getting to the point to make the teaching of the process not take the amount of time that it took me, or in the case of the surfer, not having to surf since you were 5 and doing it every day. This was our goal. So I'm trying to tell you that what I'm going to be showing you, and the reason that you're here is you're following me. You should have some faith that the guy that designed the technology has been doing this since 1994, one of the few that continues to do it, and ultimately, being the expert and surrounding ourselves with experts, we've created the kind of framework for the tech to facilitate ideas that experts can use without all of the expertise required to find them. Okay, because that's the thing when, let me go back real quick. So, Brad, we're going back to this guy, metaphorically speaking. You see he's riding a wave, right?
He is riding a wave.
Well, one of the hardest things to do in surfing, we all jump to, look at him, he's on the nose, he's doing great, but you have to realize you had to get there. You have to have been able to spot that this wave was coming and get on the ride, right, Brad? And that,
That's right.
in and of
you
itself,
got to paddle in, you got to be able to get up on your knees and stand up.
Right, so you got to catch it. You got to catch the wave. This is what I've been doing all my life, catching the waves. And the knowledge that I want to give you is hopefully to make you see, again, the light at the end of the tunnel, which is what we're doing here. So, Brad, this is the thing about the stock market. A lot of people make it so confusing, but I really wanted to kind of break it down for our audience into a simple thing. Stocks move relative to when you buy them. Because when you're not in them, the stocks don't really affect you in that way at all, unless, of course, you're going to get very literal about your 401k and people working and etc. But everything about the stock market has a lot of mathematical and physical properties. One of them is, instead of polluting your minds with indicators and pitchforks and pictures of these tops and bottoms and shampoo bottles and brands that are in everyone's heads, is this a cup of shoulder? Wait, is this a Head and Shoulders, or is this a cup of coffee? I don't know. And you start looking for the cup and handle and the screwdriver and all these things when you really need to kind of free your mind. So there's only a relative state of motion. There's relative consolidation when a stock is not moving too much in either up or down direction, so it's kind of like flatlining. And then there's relative states of pullbacks and bounces. And this is what makes the stock market so interesting. These things, they form the behaviors that we then have to track to figure out when is our wave coming, Brad. So to get there, we figured out that the only way to do it is the same way that the MIT card counting team figured out to beat Las Vegas, through the laws of large numbers. So what we do is having been doing trade ideas, Brad, when did we start? In 2003, right? So this is our 14.
We started in 2002. I think our first customer was 2003.
That's right. So having been in this so long, we've had the opportunity to go through every single indicator that exists mathematically and being able to compare them to any kind of like systematic anything. Like, can this be used in any systematic way? And the answer was always no. This is the secret that, you know, the vendors of tools don't want to tell you. You know, when people also educate people in our business, and they'll talk about, look at this pattern. This is a gap up pattern. It does this, and this is a gap down pattern, and it does that. But then you have to ask yourself, and this is what we did, and again, why I bring back my history of doing this for 20 years. We said, well, how do we have proof? How do we do it where it's not just guessing? And we did it through this scientific method, creating a computerized system that really just goes through all the numbers, finds where pockets of probabilities exist, and wait for them to appear. You know, then you have to create a strategy to exploit them. So this strategy is the reason that you're at this webinar. This is groundbreaking. Nobody has this kind of approach to the market because, again, very few people have survived the kind of things that I fortunately have survived in my life and still invest actively. The history lesson, and history is very important, Brad, I think, for this, because it really kind of needs to shape the mind of why this is such a good thing and why it's important that you're here. The history lesson is that investors who got in at the time that I got in were very enthusiastic, and there was windows of opportunity, like from 1995 to 2000, there were so many good active traders. I mean, really good guys who were making like $5 to $10 million a year trading, just ups and downs and ins and outs, and because they got good at the instrument of the market and the instrument of the way the networks work, some of the advantages that people at that time had. But when all of that kind of went away and it was just all about the behavior analysis, the pattern recognition, meaning the behavioral pattern, not imagery, when all of those network advantages vanished, the market started to kill off, deteriorate this group of active investors. I mean, and all of you probably remember that, well, if you're older, you remember that in the early 2000s, you had these commercials for TD Ameritrade and E-Trade talking about, oh, I bought this island, or oh, I own this. But the notion was just get in. Nobody ever taught people to get out. And this was the really sad thing, because getting out is not a bad thing or a good thing. It's just a matter of information flow. So going back to what I said here, there are only relative states of motion, and they depend on information flow and processing. So there's information that floats out there. For example, some study, clinical trial. Maybe, for example, I'm going to my Apple store, right, because my screen broke. And Brad, I can't get an iPhone 7 Plus for 3 weeks. They're that backlog.
By Apple.
I mean, it's crazy. So this is a kind of now, just me knowing that is one thing, but maybe again, these are the kind of information flows that are out there. And today, with social media and Twitter, and every way in which we share, this information is processed at computer speed. That's where we come in. We analyze all of these relative states, okay? We analyze all of the relative states and suggest a course of action, like the card counting team in Vegas back to, bringing down the house. When you card count, you understand mathematically that you just are simply looking for an advantage, a statistical advantage. We all know, and this is something very important for this webinar that probably many educators don't say, but the stock market is not predictable. You cannot predict it. Predicting it is pointless because the future ultimately is only unknown until you get in the present. The present is the only thing that happens. The future is unpredictable, but behavior patterns, that's a totally different story. From that point of view, Brad, I mean, we approach the stock market just like an NFL team approaches a talented college player. There's these combines. Have you guys, I mean, this is what I love, the metaphors of bringing what really happens in the market to something people can imagine. Think about how an NFL team judges like all of the star running backs and blockers. All of them go through these paces where they have to like run 50-yard dashes, they have to bench press, they have to jump, they have to do all this stuff. I mean, Brad, you know what I'm talking about, right?
I've seen it, yeah. You got to run it through the rigors, right, and judge them on all the various qualities and characteristics.
And isn't it a little ironic that it still happens even though there's 4 years of tape on each one of these people that is being judged? So you've got 4 years of history of every single player. You pretty much know what they're doing, and yet you still want that last bit of real-time info just to make sure, right?
That's right. Things can change, right? Things can change at the last minute.
That's right. We approach the market the same way. We are like the NFL team, and we're looking for good strategies, and those strategies have to perform. And they've got to do some amazing things and compete against other strategies that are also designed to perform and kick some butt. And so this system came to life on January 1st, and it's been learning and evolving. And really the big evolution that we designed, because it's been designed to evolve, but it really happened right here, which was the Brexit. Okay, the Brexit was a big down move. The AI completely stayed out of it, seeing no predictive advantage, and has been really in this kind of trajectory ever since. This is one of the reasons why we are one of, if not the fastest growing subscription services in all of financial technology. So, Brad, what I want to do now is I want to jump into the software, you know, do what we do, show you some amazing things, and just talk about, you know, we gave you metaphors. Let's get into the real life, shall we?
Yeah, and just so everybody knows, we'll save a little bit of time here after we go through the product to take any questions and do our best to answer those for you.
Absolutely. So, Brad, just confirm with me that you are able to see my screen.
I see our beautiful software, Dan.
Okay. So this channel right here is Holly, our AI channel. I'm starting here because this is the most exciting stuff, and these are the kind of things that you want to see. This is the culmination of all of Trade Ideas technology and development since 2003. This is a server-based AI. It lives in our server farm in San Diego. It's directly connected to our alert and filter database, so it can access any stock at any point in time and say, hey, at this point in time, well, what's it like 1 minute volume, and what's its relative options volume, and what's its relative social volume, and does that even mean anything for that matter? So this is, again, it started in 2003, and we've been building and building and building this to where this is what it does now. And Brad, the way I did it is I kind of, you know, broke it down into these are the suggested investments or trades that the AI gave for our clients today, the premium clients. I kind of want to go through them so that people could see it, and what I did was I did it by time. So this is West Coast time, so you can just add 3 hours on the East Coast, 6:30, 9:30. So you can see, for example, today, the first trade that the AI did was a long suggested trade at 246 in CBMX, combinatrix. Why is it doing that? So you can see that it's picking up interesting, unusual activity, and it has the kind of characteristics that lend itself to very large percentage movement. While lots of other vendors, again, are throwing indicators at you, we use physics, the float. Brad, would you please tell our audience what is the float and why it's important? Brad, you would have to unmute yourself.
Sorry about that. So essentially, the float is really the number of tradable shares of a stock, and it's a subset of the shares outstanding, which includes the number of shares for the private equity holders of the company?
Correct, of course. But why is it important, Brad? Like, what's the difference between like
Well,
one? Who cares if it's 1 million or 10 million?
Yeah, I think it reflects the amount of stock needed to really move a particular stock. So how many shares can be traded that really will reflect active stock movement?
All right, so let me give everybody, first of all, just a quick navigational aspect. The software Trade Ideas Pro, it's very customizable. So I can take any window, I can get rid of it, I can go to any window, and then I can duplicate it. So what I'm going to do now is I'm going to have two of these windows, and I'm going to give you just a little example of like, well, how does, one stock's flow, let's say, compared to another? So in this example, let me make sure that this one.
Yeah, you want to take a symbol linking there. There you go.
Yeah. Okay. So here we're going to say Apple, a stock everybody knows and loves, and this one's CBMX. This is the combinatrix. They are molecular diagnosis, DNA-based testing for the detection of genetic abnormalities. In the biotech sector, that kind of stuff. So just consider everything in a planetary sort of way. Imagine Apple at 5.31 billion is kind of like Jupiter, the planet Jupiter. Brad, is that a good, maybe metaphor? Whereas this CBMX then would like maybe be like our moon.
Yeah.
So the reason why I'm even, again, bringing this to your mind is that the physics of it do play an important factor. If information processing, and we learned earlier that information processing is what drives the relative states of motion for any stock. So some news came out on CBMX, and the news to us investors is not actually as important as you might think, and I'm going to tell you why that's a good thing. Okay? So something is happening here, but because the float is just 1 million shares, the stock traded 727,000 shares today. That means almost the entire ownership or the float that's available for trading changed hands. That's a lot of, demand.
By the way, Dan, that's what, 6.7 times normal volume for that particular stock?
That's right. And also, look, it's up 23%. I'll give you another example of another stock that was very exciting just a few days ago that we had on our AI, and I'll just blow this up. NSPR. This thing went from 166 to 448 in one day, and this was not all, just one print kind of stuff. You could have been in it, and people were in it, and then once, if you were in it, it didn't just crash, So this is the kind of information that most people don't even know exists in the stock market. Most people have no idea that these opportunities even exist. But the reason the float is important is that you need to understand the relativity, how difficult it is to move a stock like so you're just kind of trying to get to know someone. And I'm speaking in just relative terms here. So Apple traded 27 million shares today, and it basically traded just a little bit below average, kind of like anemically. Just like, and moved 10 cents. So with 27 million shares changing hands, Apple only moved 10 cents. Think about that versus, again, CBMX, where 727,000 shares moved at 55 cents or 23%. Information is the game changer here. Again, most people do not know these things even exist or that there's an opportunity in them. Okay? So all these suggestions, they come with a timestamp, an entry price, and of course here you can see one happened 6 minutes after the open, the next one 2 minutes after that, then 10 minutes, then there were 2 trades 30 minutes after that, then 10 minutes, there were 3 trades, another 2 minutes, another 5 minutes. You can kind of see like what was the flow. The flow was exactly what it was, but more interestingly. And a lot of my partners on the educational side, we talk about this. The software tends to be right when it comes to directional bias. And goodness gracious, I mean, did that pay off today, Brad? So, Brad,
exactly.
Brad, do you know what I mean when I say directional bias?
Directional bias. Yeah, that is if Holly starts spitting out a lot of short positions or gives a lot of activity short, the directional bias would be short. So it'd be to take a notice here and kind of watch your longs. And she's looking at the market, right? She's looking at not only the stocks, but she's looking at the market and making that judgment call as to which strategies she should be firing off on.
And remember how she's doing it. That's different from how you do it. She doesn't see like, oh, S&P just broke. Oh, like, and I'm only making fun of a lot of our inner demons and thoughts, but everybody has these kind of funny things like spiders breaking, spiders going. Like you find yourself like almost like in a kind of mental back and forth about something that is really just drawing attention away from your concentration on the things that you should be focused upon. The AI does not do that. The AI is running MIT-type numbers, and it's saying, hey, based on the statistic of what's been happening on the million trades that I do a day, so that's the other exciting thing. Right now, while we are doing this webinar, our AI is crunching the numbers for tomorrow. She will go through approximately 1 million trades to get us the next best lineup. This lineup today did incredible. 6 points, mostly on the short side. It was again, it was.
So really, Dan, let me explain this because it's pretty amazing, what the computers are doing right now. And like you said earlier, it's going through the combine, but it hasn't even really reached the combine state yet. What it's doing right now is it's going through every one of the strategies that it has in its arsenal, if you will, and it looks at the market activity today and over the last several months, and it then decides which filters it should change or modify or remove, and it does this. That's what it's doing, is it's a million trades going through these different strategies and trying to put in the right filter set to make it the most optimal strategy for you tomorrow, and it does it with a real variety of different statistical techniques using in-sample and out-of-sample data to avoid curve fitting and the like of that. So it's really using all this sophisticated statistical analysis to refine all these strategies, and only then does it kind of get worked into the combine where all the strategies get pitted against each other, and only the cream of the crop really make it to tomorrow, the ones with the highest profit factor and win percentage and average winner to loser ratio. So all of that kind of gets worked together to give you what we're going to see tomorrow. And even if power hour short makes it tomorrow, it's very possible that that's a slightly different strategy. Even though the same concept will exist, there could be some refinements to it.
So Brad, notice I added a column to help people see that this is the MIT card counting part. This is the statistical baseline, tested, optimized, like kind of game plan, and why we're trading them today. These were the winners. 1, 2, this is the best that we got out of all, and there's like 40 players that always compete. There's power hour short, quarterback, downward momentum, etc. These are just names that we give people, strategies for kind of mnemonic entertainment so that they kind of catch your attention. And not all of the strategies that are selected by the AI even fire. So if I remove the active, you can see that today actually had 1, 2, 3, 4 strategies that ended up not producing any signals. In other words, they were great. Look, a 77, a 72, a 60. But because you can't predict the future, nothing just happened to have fit that behavior pattern. So this is what we got instead, which still proved to be incredibly good, considering that the AI was able to intune that the market would end up selling off. That was the predictive behavior that it saw from the math. So this is something that, again, you just are not seeing today in the market. And partly, and this is, Brad, where I want to get back to the philosophical part of what we're doing. Partly, I really believe it's the problem is that everybody is being indexed into the same kind of thing. Like, you're having a situation where almost the entire industry is focused on having everyone automatically be in the market. But what happens when that happens? There's some danger. Okay, and the danger is this, is if everybody's in the same thing, right, then how do you really...
You'll never outperform.
Well, you can not only never outperform, but it seems like a very difficult environment for risk. Like, for example, I'm in things like CBMX, and I'm not saying, this is metaphorically, not at this moment, but hypothetically, if I'm something like CBMX, well, this looks really dangerous to you, possibly, because that's the way it's been painted. But there's nothing dangerous about it. Everything is relative to your risk profile. There's no magic. It's just a stock, and you can get in and out of it with virtually no problem, just like you would an Apple or an Intel or a Netflix. So the key here is to kind of broaden your mind and realize these opportunities are here, and they must be spotted and acted upon for you to have any hope at all of this. And it took me a long time to get there, and I am this guy, but just my waves are the stock market. But you are basically using the AI that we have invented to have me in the water with you the whole time. But I really give myself a lot of credit here. Brad's with you, Jamie Hodge is with you, Steve Gomez, Andy Linloff. Like, all of our customers are Barry Anderson in our trading room that I haven't even discussed yet, because we've been talking about just the philosophy of getting into the market and getting these trades. There's so much underneath the surface. For example, every single thing that you see in trade ideas, okay, that you're able to spot, you're able to mark up instantly without any kind of programming. It's a right-click option. You just go where you want to be alerted, right-click, create the alert, and just make a note. Don't want to miss this one. Okay? Now you have it, and it's that simple. Going back to, I'm not looking for some magic double, triple top with a coffee bean handle on it. Nobody knows what that is, mathematically speaking, because everything is relative. Let us help you in the best way that is available today, using the power of computing, using the laws of large numbers. This is why why we're growing so fast, is because we're providing the kind of trades that, I mean, Brad, you know what's funny? I didn't even talk about it. I said, look, CBMX, this is the first. So the first trade today, the first one out of the gate, was a 12% winner. Let me just pause there. Brad, was that a good pause?
That's a great pause, but you know, when you actually look at it, that was a great pause, and it did close on highs too, didn't it?
That's what I'm saying. Like, we specifically, there's no other system or service that, I mean, of course you could go look at FinViz and find CBMX on it, but you would have had to have, you would have seen also like 100,000 other symbols. The point is, we are beyond the toolbox. We have a methodology. There's no more needs for tools. You need a strategy, a course of action. If I was going to learn how to surf, you know what would be awesome if I was super rich? Because if Kelly Slater would surf with me every single day and just teach me what to do and take time with me and just all day long when I'm in the water, he's like, come on, Dan, this is a good one. Now follow me. You see what you see there? Okay, this is how I do. Like, that's the kind of stuff that I would want to have. And that's what we built for you. So Holly is a virtual knowledge board of my knowledge and Brad's and all of our knowledge all throughout the years to not only spot the CBMX type opportunities, and she was on NSPR yesterday for a 59% gain. And again, and it's not just one-hit wonders too, and not in one direction. But but it's also the proper way to lose. Okay? So let's look at, it's so easy to just focus on just the winners, right? But let's look at the losing trades. Okay? Because part of doing it properly is understanding that the biggest risk is always, of course, in the negatives. So there are two ways that our AI helps you here. Number one, she is already trying to be directionally biased in the right way, okay, through statistical analysis. Number two, every position you're in, she's watching and she suggests a course of action, okay? If you want to be risk off, meaning if you want to be more focused on capital preservation, if that's what the suggestion is, and by the way, it varies back and forth throughout the day. So you can be in risk off mode and then risk on mode can appear. That means the positions that Holly was in are starting to move in. So there's an ability to trade around and do even better than the AI. So you can kind of go back and forth, especially since we are the type of investors who benefit from the low commission rates that are available now. Think about things like Robinhood where you can trade for free. But the point is, look at the biggest loser the AI had is 33 cents. That is the key. That's the impact number. The biggest gainer was $1.13, 3x the loser. That's what you want. That's what we have. That means, if Kelly Slater's out there with you, he's getting up on almost every single wave he wants to, and he's showing you the right waves. That's how you need to see it. Okay? But it's not all just about that. We have a whole cable channel lineup. The AI is only like the thing that drives it, but you really can research everything you need to know. Earnings. What's up with earnings today on the upside? What about on the downside? You can see instantly like a different flow just depending on what it is you want to do. How about after hours? What's happening in the post market? Is anything out? Oh my goodness gracious. Look at this. Fitbit is down 31%. Yikes. You just saw it here. Okay? So terrible. But the point being is that you can see this information. Notice we have things like post-market volume, up or down post-market. So look, you can see FIT is down 29%, DPLO, pharmacy down 26%. You can just make notes and alert yourself on the turnaround without doing any analysis. You just trust your basic understanding of human psychology. Hey, let me know if all of a sudden this starts getting higher. That's it. And move right on. People make investing more difficult than it needs to be. So let me tell you now why investing is actually one of the best things. So Brad, I got to bring in National Geographic here, but I mean, you have to.
Okay.
Sometimes people kind of, again, they want to label things as these just black and white things as good or bad. Speculation is neither specifically good or bad. The question is, how do you apply it? And if you think about like when the lions take down a big water buffalo and they eat, you have other animals coming in, the birds, the jackals, all of these other parts of the animal kingdom are able to feed off of the work that happened, that the lions did. Okay. This is very metaphorically similar in the stock market. Okay. Research is coming out. Some of it's coming out on social media. Some of it is, being disseminated in real time quantitatively. It doesn't matter. What you need is a vantage point where you can see how all of that is happening. This is what we do in our channels, just simply allow you to surf information in the most interesting way that we already know how to, and that it works. Like, for example, we have a social media channel, so every stock that's being discussed, either unusually high and sentiment up or unusually high and sentiment down. You can see all of that happening in real time. What's just being talked about in a very unusual amount. Look at this one. What is it doing? We don't know, but let's put an alert. Once again, see, you don't need to know. You don't need to worry about that, because scavengers, they don't need to like have a whole explanation of why the animal went down. What they need to know is they need to come in there and be part of the environment and the ecosystem and take in the information. So here, I'm seeing this, I'm taking in the information, I'm making a note. You're making the system more efficient by being in the market. You, as a speculator, as an individual speculator, you are making the system more efficient. When a stock goes up 80% in 2 days, you take profits, and that's a good thing when people then find out that there was actually nothing happening. These are, I'm giving a high-level example, but that's what goes on. This is why you're here. There's never been a better time to take advantage of this information than with the technology that we have been creating since 2003 and that I'm surfing through for you today. There's nothing that you need to configure. It has been the configuration element of needing to sit there and work and setting up you can do it all, but there is no need for it. We have, again, just like Netflix, you can see what's trending, you can see what's going on. We have a vibrant community that is moderated by Barry Anderson, who is there every single day from market open to close, giving a best case user scenario of how to apply our information to extract alpha out of the market. And he has his own custom windows. We share this information amongst subscribers. Our technology has the cloud, so that you're not confined in any way, shape, or form. You just have all the advantages, and we then teach you through, again, our forums and our media how to be an active investor, speculator, someone who can generate alpha for themselves and ultimately end up on the surf ride. So Brad, where are we on the questions?
I think we're caught up on the questions. There may be a new one coming in right now.
Okay, so let me then discuss what Brad and I are working on, just so that everybody can kind of have a gander and a feel. Like, we try to keep things consistent on the webinar, and we also say if you're new to trade ideas, the things that we suggest is that we're always going to be showing you some interesting things, interesting stocks. Write some of these names down. Like, the AI typically brings things to you at points of inflection. Okay. Now, by the way, you don't have to be uber biased in any direction, even though clearly for BJ's restaurant the trend lately has been down. And had you been playing Holly's strategy of shorting these waves, you've been doing pretty good. And that's what she's doing here. So you can kind of see the behavioral analysis that's taking place. This is sort of the same thing. If you were able to trade these breakdowns the right way, the stock is continuing to go lower. That's what the statistics suggest. It's always going to give you information that becomes critically viable to make the kind of alpha that people only dream about. So here, NSPR. So Brad, we picked that up on this day at 2:07. Okay, so right now it's at 3:15. So let's put an alert on it at 3:23, and we'll just say going again. The beauty of being here is once you take a look at what some of these stocks do, they're exploring cures to Alzheimer's, cancer. There's all sorts of amazing things happening in the stock market, and being this type of speculator, being an individual investor, you are exploring and helping ferret out the things that are actually things that can make a difference. Not everything, and there will be winners and there will be losers, but being active and seeing what's going on, and also seeing how do stocks behaviorally react to the market, all this anxiety about Trump and everything that's happening right now. You start learning, and you start getting better and better by seeing, well, what is Kelly Slater doing? And by Kelly Slater, you know I'm saying the amazing professional surfer who's won like 10 million surfing competitions. This is your Kelly Slater. Brad, don't you want to go surfing with Kelly?
I would love to go surfing with Kelly. I'd probably learn a thing or two, I am sure.
Or go play Tiger Woods, go some golfing with Tiger, although maybe today it's more like Jordan or Rory, but still, it's the same thing. Imagine if you had somebody who did it the best way possible, doing it with you every single time, not only on the tech side, but on the human interface side. Okay? All right, so let's see, there was a question. Can you filter Holly alerts to companies with $1 billion market cap? No. And the reason is that you can't force the AI to give numbers where there are none. So we don't exclude the $1 billion market cap stocks. But if that's your personal profile, then all you would have to do, for example, so here is a trade. And what did I just click on? Oh, FSLR. Where did it go? Good. Okay, so here, let me bring it up. So FSLR, you could easily click on it. And remember, this is not meant for robot trading. This is meant for people. And you can be like, oh, okay, no problem. 4 billion market cap, moving right along. Garmin, no problem. 9.5 billion market cap, moving right along. Automation is not coming. I mean, you can always suspend your subscription at any point in time, but please be aware that if you cancel your subscription, which is what suspension is, you no longer are on the grandfather rates, and we have been raising prices every year. Okay, Brad, so I think we've caught up. Is there anything that you would want to add that I have missed?
I mean, I think you did a nice job explaining it. You really did highlight Holly, which is some incredible technology that we've added, but don't dismiss the fact that for 10, 13 years, we've really built a foundation of just incredible analytics. And I think the main thing that we've done that's really incredible, that allows Holly to be so successful and allows you to create any number of windows, is really the metadata that we create, the new forms of data that we create out of the exchange data. It's really data unlike anything else, and it gives you a view of the market that lets you really find the opportunities that are happening in real time. So, it's really a layer. This is a software platform. It's not just a tool. It's a pretty small little downloadable application. It's also available, by the way, on the web. We have a really robust web-based version. But we've created all these different windows to highlight actionable ideas that are happening in real time. So it's a platform of a tool.
Yeah, and like Brad said, we also do have two levels. We have the premium and the basic. But here's something for you guys to think about. This artificial intelligence that does not exist anywhere else, not on Schwab, not in VectorVest, not in TC2000, not in FinViz, not in any other platform anywhere else, costs roughly about $5 a day. So that's how much we charge for it if you break it down on a per day basis. So that's how we make a living. We're a software as a service company, and I'm actually not the one that's going to tell you all about that. Scott, would you be so kind as to pop in and take over for this handsome young man?
Yeah, sure. Yeah, thanks for the presentation and everything. So, we like to thank people for attending. And something that we do for that is give a little bit of a discount to make it easier to get on into Trade Ideas your first month of your first year. If you use that code, Price Alerts, all caps, that's good this month. Go to, also, if you want to download this page and also our contact page, you can go to the handouts panel, click on the plus to expand it, and then there's a PDF there to download with this slide and the next one. And then you can look at the differences between standard and premium all you want. But the general thing that really separates premium from standard is the added functionality of the artificial intelligence and our unlimited back testing and other advanced windows like price alerts that are shareable. And the advanced windows, red bar ignore, green bar ignore. And you can always contact us at info@trade-ideas.com if you have questions about these things. But you can just go to trade-ideas.com/price and use that code that we showed. That's 20% off your first month or year of premium, or 15% off your first month or year of standard. Actually, I think that's right. I'll go ahead and check on that. But that code will be good for the rest of this month, and I want to thank everyone for attending. Oh, we'll have a recording of this webinar up tomorrow for you, and you get an email with the location of where to find that. And you can contact us at info@trade-ideas.com with any questions, or you can follow Dan on Twitter at TradeIdeas1. We also have @TradeIdeas. Facebook.com/TradeIdeasPro is where to find us. And yeah, thanks everyone. The recording will be up later. If you have a question for Dan, email him, Dan@trade-ideas. Thanks, guys. Thanks, Dan. Thanks, Brad.
Thank you very much. We look